Welcome to Friday Takeaway. On the docket today, Sunway and Wah Seong. But first, let's start with news that the IMF has upgraded Malaysia's GDP forecast to 4.8% from 4.5% previously, thanks to steady monetary policy and more manageable debt levels. However, 4.8% is still lower than most local estimates of growth above 5%, since our exposure to China is still a key concern. Ride-hailing service Grab, they've raised $2 billion in funding from Didi and SoftBank, which is the largest single funding deal in the region. This deal now values Grab at around $6 billion or a tenth of Uber, but analysts say the real value lies in Grab's e-payment platform. Petronas, they've scrapped the $27 billion Pacific Northwest LNG project in Canada, blaming an extremely challenging environment due to depressed gas prices. Facebook, meanwhile, they've beaten expectations for Q2 earnings, reporting $9.32 billion in revenue. Mobile ads drove earnings, which generated 87% of total ad revenue, up 84% from a year earlier. They've got over 2 billion monthly active users and 1.32 billion daily active users, and profits hit $3.9 billion in Q2, making more profit than Google for the first time in their history. A quick look now at the CI. As at 10 a.m, KLCI is down marginally by 0.02% to 1,770 points. That's just 0.6% higher from last Friday's closing. Year to date though, the KLCI is up 8% and nearly 10% on a 12-month basis. Next up, some big weekly movers. Sunway Berhad. Well, they're a property and construction player controlled by the Chia family, and last month they proposed a bonus issue of 4 shares for every 3 existing and 3 free warrants for every 10 existing. Sunway's already won regulatory approval. Hong Kong Investment Bank said this was faster than expected. That's fast. The stock's done pretty well though. They've risen 48% on a 1-year basis and 42% year to date. Today, $4.57. Not a lot wrong with Sunway, but Hong Leong warns that a prolonged downturn in Johor's property market plus execution risk on its projects might militate against its fortunes. Hong Leong says a buy call and reiterates the buy call as the above approvals will serve as strong share price support. Plus, they like its diversified revenue stream and recent classification under the trading and services sector. Price target, $5.04. Wah Seong Corp Berhad. While they're an oil and gas and industrial services group, they got business footprints in over 14 countries worldwide. Wah Seong have won a gas pipe coating project from Nord Stream that analysts say buffers their order book, provides long-term earnings visibility, and is part of a larger plan to pivot towards the higher growth gas sector. They have also earlier this week strengthened their balance sheet by selling their Gebeng property in Pahang to Axis REIT for 155 million ringgit, in which will get a one-off net gain of nearly 98 million ringgit. This week, the stock is up some 5%, but is also up 19% year to date and higher by 25% on the year. Today, though, it's down 1% at 95 cents. Earnings are still weak, the entire energy sector is still under pressure, and while selling Gebeng will help lower its net gearing, it remains a negligible development from a bottom line perspective. Maybank is a buy on Wah Seong with a target price of 1 ringgit 30 cents on the stock. That's a massive 35% upside from current levels.